Hey traders, happy Friday, everybody. Welcome to Charts and Coffee. Great to see everybody. Hope everyone is winding down their week, right? We're getting ready to go into the Christmas weekend and probably some of the trickier trading that we are going to see as we wrap up the year. End of quarter, tricky time. End of year, even trickier. And ultimately, what we want to remember is that, oh, hey, free trading room. Oh, hey there. Yeah, I guess I'm not supposed to be in there. I don't know. How could I do a charts and coffee on a Friday and not see the folks in the free trading room? So yeah, shout out to everyone on the Simpler Trading YouTube, my YouTube, free trading room. Great to see you all. Yes. All right. So as we wind down the year, as we wind down the end of quarter, we know some of the phenomena surrounding this time of year: tax loss harvesting, window dressing, window undressing, Santa rally possibility. Today would technically be, right, kind of the beginning of, if there is going to be a Santa rally, we're going into the last 5 trading days of the year. And then Santa rally goes into the first 2 trading days of the year. And that's where we are. Now, I'm not saying that the tendency is a trade, but there is a repeating rhythm to this time of year, and that's what we're going to keep an eye on. All right, gang. So again, great to be here. Let's jump into today's big news, and that is looking at what we had with the PCE. For those of you looking at the PCE number, let me take you on over to Forex Factory. All right, so Forex Factory, don't get too hung up on the Forex part. The reason I use Forex Factory as the calendar here when I'm talking about data releases is because I don't want just US data releases. I want to know what's going on in other countries, especially Europe, uh, because we know that's going to affect what happens in the US to a certain degree. And right here, core PCE, you take a look, what did we get? 0.2, right? Now, what does that mean? Hotter, cooler, holding. The way that I'll process this is a win for the Federal Reserve? Is this something that they can say and point to and say, see, we've got inflation under control. Our monetary policy is on point. If they can, then the expectation becomes, let's take a look. What do we see in March? Any adjustment to the target rate probability? None. None. March continues to reflect 4.75% to 5%. Any adjustment in May? No. We continue to see 4.75% to 5%. Let's fast forward out to September. This is when the pivot starts looking a little bit more clear. And you know what? Nope. It looks like September now is firmly, relative to a quarter point cut, a little bit more visibly in the lead. So September is not going to be a pivot month. And then we get out to November. Take a look, gang. November then starts to show a little bit more inclination for that cut. Now, how do you know, right? If we know that our target rate probability is 4.75% to 5%, if that's the peak and pause, right? We plateau right there. Any other P words I can think of? So we peak and plateau there. That is that terminal rate. And if the terminal rate is 4.75% to 5%, anything that takes us down to the 4.5 to 4.75 column, that starts to represent a possibility, not a probability, a possibility for a rate cut. We can track what the pivot, when it may be. Anytime we get inflation data, anytime we get growth data, anytime we get jobs data, it's going to map to that corner of our expectations. What is the Federal Reserve going to do? All right, so let's jump into the questions, shall we? I can see them coming on in. That's awesome. Just a quick look at what we have on the S&P as traders and investors digest what's happening in the S&P 500 post the PCE release. And take a look. Gosh, I want you to notice 2 things. This is so important. And this is what distinguishes, say, PMRs from, and again, I'm not dogging another tool, but Just want to show you just a massive difference in interpretation of expectations, right? Okay. This is the PMR showing us very narrow volatility, right? Support and resistance. Take a look at what happens between 8 and 9 a.m. If I have a cumulative study, say by comparison, an ATR, which is what this gets compared to so much. An ATR has no understanding of what 7 to 8 a.m. means as opposed to 8 to 9 a.m. PMRs are historical volatility broken down into hourly pieces. That's why it knows the difference between that and look at how much wider the range is here. Look how much wider the range is here. That's the adjustment we need as traders. We need to know this is a more volatile environment and it allows us to absorb that volatility, much like a shock absorber, right? But what we need is a shock absorber from 7 to 8 is very different than 8 to 9. That's why I use things like this as opposed to other indicators that don't know the difference, right? So just for those of you that are wondering, Ron, yeah, how would you use that? What's the interpretation? Support and resistance, gang. All right. So as always, let's jump into our very first question. And that is I want to trade MES after hours. What time periods are active, high volume to trade? So after hours, well, it depends on which financial centers you want to focus on. Do you want to focus on the Asian session? That's going to be the first session we get after the US close. And I would not engage the Asian session any earlier than say 8 p.m. Eastern. And then that continues to about 2 a.m. with the European Open, 3 a.m. with the UK Open. It's more about which times not to trade. So I would say avoid 4 to 7, 4 to 8 p.m. Eastern. And then I would also avoid 4 a.m. to 7 a.m. Eastern. Other than that, the question I always ask myself in terms of volume is participation. Who's awake? Which financial centers are now up and running? Because remember, for example, in the Asian session, it's a layering process. So you get Auckland, you get Sydney, you get Tokyo, you get Hong Kong, you get Singapore. The more of those 5 financial centers that are open, again, the more the turnover, the more the volume. And that's why I say about 8 p.m. All right, for that first opportunity to trade, as you said, after hours. All right, next up, Kevin asks, what causes the Santa rally? I don't know that there's a specific thing that I can say that I know causes it. But if I think about all the things that are happening end of year, from window dressing, bullish, uh, to the optimism about, I don't know, a new year, year-end bonuses. I mean, there's a lot I could speculate upon, but what I try to lean on is the fact that if I go take a look at the seasonals, let me see if I'll just pull up the seasonals here with y'all. If I pull up the seasonals and I look back 5 years, 10 years, 20 years, 25 years at the S&P and the tendency for this time of year, I just see again and again and again the same pattern that many of you see, right? We just tend to, at the end of the year, move higher. It's probably a number of reasons, Kevin. I just know that the phenomena, I don't know about the why all the time, but I know what, right? And I think the what here is pretty reliable, but it doesn't mean it's a trade. It's just a tendency that we'll look for. And it does mean Santa and window dressing do overlap, which is to say, strong stocks get stronger. I'm not looking at all for, say, Tesla to get a relief rally. I'm just not. I'm not looking for, say, Amazon to get a relief rally. Um, weakness will get weaker, strength will get stronger. And that's really where Santa and window dressing would overlap for me. All right. Thanks for the question, Kevin. All right. Next up, and yes, happy Christmas. Absolutely. Uh, Good morning, Frank. Was on the Simpler website yesterday. Cool. There are many options for mastery classes. Oh yes, we have multiple masteries from many of our content providers here. I saw yours. What's the difference with the example John Small account? Frank, I'll tell you what. The way that I break it down, A mastery is an immersion in a single trader's approach. So, um, my mastery is an immersion into the things that I do, day trading wise, daily time frame wise, and even for my portfolio, we cover all three of those time horizons. I'm not. We got to be frank. I'm not really up to speed on what the other masteries are doing at the moment. But if you have any questions, what I would probably say is. Um, Contact customer service or maybe jump into our free trading room and ask some of the moderators and or traders in there, for their style. Get a feel for different traders' styles. But in terms of difference, I think the main difference is it's which trader you're looking to learn the style, looking to learn the tools of. All right. So I appreciate the question. Thanks, Frank. All right. Next up. All right. Make sure I'm keeping up with our free trading room. Okay, very cool. Can I please take a look at Tesla on the daily? Oh, yeah. Okay, great. Hey there, Praveen. Should I wait to rise up to the wave lower band to short? Oh, gosh, yes. I would want some kind of reversion to the mean retracement, bounce, whatever you want to call it, before that. And no, I would not short down in here. Some folks are comfortable shorting in the hole, as it said. I won't do that. I need some kind of retracement. Now, it doesn't have to be all the way to the wave. What are other things you could consider? Well, let's see. If I pull a minor high and a minor low, presuming this holds, maybe 160 and a half. If I was being a little bit more aggressive about it, we could look at about 151 and a half, 152, that area. So I would not short at the lower lows. That much against my process. But what would qualify as a high enough bounce, as a high enough retracement to allow us to short from highs? And that's what I would look at. I think some simple 50% retracements per vein of the last major move would work pretty darn well. All right. Thanks for the question. Okay, next up is yeah, Norman says tax loss selling. Yeah, I think that any kind of weakness in ETFs, in weak stocks, Tesla, Amazon, XLY, XLC, right. I think they're very much going to be subjected to, as you said, that tax loss harvesting, which is very much overlapping with the window undressing. What symbols on a year-end statement that, let's say we were portfolio managers or money managers, what symbols on a year-end statement do I not want heavy, prominent, a lot of exposure to when I'm sending out the end of year statements to my clients? Dang, that's window dressing. Undressing. Window dressing is what symbols, what ETFs, right? Stocks. Do I want to show that we have weight in? And that's why they call it window dressing. There is clearly a superficiality to it, right? Yeah, I hear you. I hear you, Norman. No argument there. No argument there. Hey there, Cynthia. How are you? Just a testament. Oh, thank you very much. I do appreciate that. Thank you. Thank you. Thank you. Thank you. I do appreciate that. Very kind of you. All right. Cash insomnia. Any thoughts on the overestimation of jobs growth by a million in Q2? Probably old news at that point as far as impacting the market. I don't even. Any thoughts on the overestimation? So you're talking about Q2 of 2023? Cash insomnia? Um, I don't know that it's an overestimation. I don't know. I don't know. Do I have any thoughts on it? I'll be frank, my friend, not a one. Not a one. I don't know that is to be true. It's too far in advance for me to say. Is it being factored into the market? Probably not. Probably not. There's a lot of conversations that happen on the internet and on television that are only happening on the internet and television and not necessarily thoughts that are running through traders and investors moving in and out of the market. So I really don't. Yeah, I really don't. All right. Okay, next up is 2022. Yeah, I haven't even given it a thought, to be quite frank. Um, so I don't know, my friend. I really don't. Uh, but that's old, right? I think you nailed it right at the very end of your statement there. It's probably old news. I agree. I mean, we're in Q4. We're thinking about 2023. So no, I don't think it's a factor any longer. It probably was closer to whatever that overestimation. Yeah, I hope you get my point. Yeah, to your point, yeah, I doubt it's being factored in right now. All right. Next up, Stacy, does a 50% retracement from previous levels apply generally, or were you just speaking about Tesla? Generally, absolutely. Absolutely. Um, I think there's some validity to Pingala numbers, right? If I'm looking at that 618, 50%, 382, and I'm looking at the way in which there's expansion and contraction, there's a lot of validity to that series. And yes, some people call them Fibonacci. We call them Pingalas in the sector secrets room. Google it, you'll see. But anyways, yeah, Stacy, I agree. I agree that it's a pretty good general rule, right? Is it something that I'm going to use as a setup, standalone setup? Probably not, because in this case, what would help the Tesla setup from a standpoint of that retracement have merit? The underlying downtrend. Yeah, the underlying downtrend. You bet. All right. Thank you for the question. And it has worked. Stacey, I've been using a 50% retracement in my trading for decades at this point. It's simple and it does seem to work a lot. You know, I'm done trading for the year. Nice. Now about reviewing and uh, backtracking to 2023. This is a great time, as you said there, chunk. Um, to hit the pause button, right? To shorten the time frames, to realize that we're trading to a very finite psychological um, date, which is the last trading day of the year. And, I'm very optimistic about 2023, not because we're just going to have a 2020-esque, you know, buy everything up trend, but rather we've survived 2022, which has been, one of the swiftest, actually the swiftest monetary policy shift and tightening cycle ever. If we've survived it, I feel like we're a group of traders who've been through Hell Week, only it was 52 weeks. And we're prepared for whatever 2023 is going to bring. We've fine tuned our tools, we've fine tuned our approach. We're clearly much more experienced and ready for whatever 2023 is going to bring. And after that, I would say, yes, I'm very optimistic about 2023 being bullish. Yes, there's all sorts of recession talk. But, gang, think of it this way. If it's going to take 2 quarters to confirm a recession, the soonest that we're going to know is basically June, right? By the time we get to about November, we're going to already be getting messaging, possibly, as possible, perhaps it is to get a recession, then it's also possible that we can start talking about then the Federal Reserve within another quarter presenting to the marketplace a potential quarter point rate cut. The timing could be very interesting if we end up in recession to say, but the Federal Reserve is going to start loosening monetary policy. And that's the way I kind of counterbalance probably the two biggest forces that are going to affect everything that we do in 2023. So I hope that makes sense. Just my take, gang. Just my take, just my opinion. And I'll continue to, as they say, hold a strong opinion loosely. We always want to rely on the data. Hey there, Mr. Walker. How are you? SMH. I would probably be very cautious about SMH. Take a look at maybe any relative outperforming stocks within it. You bring up the Taiwan Semiconductor, number one weighted stock within the SMH, clinging to the wave. I gotta think there might be some better places, Mr. Walker, that we would want to put our money to work that may not be subjected to weakness in the Nasdaq. Overcast day, and all of a sudden the sun just came right out of the sky. How pretty outside. Okay. Anyway, I do like where your head's at because you're looking at the strongest corner of tech. So I like that. Smaller position size. Be cautious on that one is what I would is what I'll say. Okay. All right. So, gang, got to wrap it up here. Jumping on over to the Sector Secrets Mastery Room. Right now, gang, we do have a really good sale going on. I always like to let y'all know when stuff's on sale here at Simpler. And if you head on over to Simpler Trading, you'll notice our memberships are on sale. If you head on over to sectorsecrets.com, you can take a look at what we're offering in my mastery. All right, gang, have a great one. Thank you as always. Happy Christmas. I'll see you all on, what is it, Tuesday? Heck, I might do a charts and coffee on Monday. I might. Why not, right? We'll take a look, get ready for the week, take your questions. So I'll see you all next week. Be good to each other. Happy Christmas. And I will see you definitely on Tuesday. All right. Be good to each other.